Good afternoon. You're watching Businessworld Live. I'm Delos Santos. Let's take a look at how the local bourse closed today, Wednesday. Okay, Philippine stocks alternated between gains and losses in the middle part of the session today before finally getting sold off before close. The PSEi today ended lower by 8% to 6,785.94. This is manufacturing in August weekend to 46.4 from 50.4 the month prior. This is so far the lowest reading this year. That has led to drops in some major manufacturing players here. You'd see here food manufacturer URC is a day's worst performer, declining 4.5% to 144 apiece, while its parent JG Summit, which has investments in petrochemicals, airlines, and property, is not far behind, retreating by 4.2%. On the other end of the spectrum, as you can see right here, FGen outperforming big time today. The day's biggest winner, capping off the session with a 13.6% rally. The power player heavily bought today after it said that Philippines Clean Energy eyes to acquire shares of First Gen at 33 pesos a piece. The tender offer should cover 3 to 5.7% of First Gen. That bit of development overshadowed news that FGen's second unit of its Avian power plant can't operate due to a compressor issue. First Gen today concluded the session at 32 pesos and 15 centavos a share. Now let's zoom out a bit to look at one sector which bucked the sell-off. I'm talking about the financials counter. Lenders ended higher today after July data showed that bank net loans fell 0.7%. That is the weakest pace so far this year. That also compares to a 2% decline from the month prior. The gauge rose 0.7% with Union Bank and BDO leading gains. Union Bank right here up 3.25%. BDO on the other hand up by 2.8%. Now, lastly, let's have a quick glance at the REIT space by zeroing in on Philinvest REIT. It declared a cash dividend today in the amount of 112 centavos per outstanding common share, equivalent to an annual yield of 6.4%. Recall that during their debut, PhilREIT forecasted a dividend yield of 6.3% this year. PhilREIT today, as you can see in the chart right here, ended higher by 1.7% to 7 pesos and 18 centavos a piece. Here are other headlines we're keeping our eyes on. Reimposed lockdowns dragged the country's local factory output in August to its lowest level in 15 months. IHS Markit showed Philippines' Purchasing Managers Index, or PMI, at 46.4 in August, down from 50.4 in the previous month. A figure below 50 means contraction for the manufacturing sector. IHS Markit says the August lump came as no surprise, with Metro Manila and other provinces placed back in a CQ. The firm noted factories had to pause production in compliance with stringent protocols. The government may start opening vaccination to the general public by October. Vaccine czar Carlito Galvez says this comes as millions of additional doses arrive in the country. He says the Philippines is expecting some 137 million doses to arrive in the remaining months of the year. 25 million doses are due for arrival this month and 29.5 million for October. 3 million doses of Sinovac also arrived on Tuesday. Over 33 million doses have been administered so far, with close to 14 million Filipinos now fully vaccinated. The Interior Department vows assistance for residents in areas to be placed under granular lockdown. DILG Undersecretary Jonathan Malaya says the ayuda will come from local government units. The proposal to shift to granular lockdowns is now up for IATF approval. LGUs are urged to coordinate with their police districts in implementing granular lockdowns.
Ng national government na meron pong augmentation na ibibigay ang national government kung sakasakali pong mag-i-impose ng granular lockdown ang mga local government units. During the first week ay ang LGU po yan, ngunit sa pangalawang linggo po ay papasok na po ang DSWD for the provision of food packs sa lahat ng mga naka-lockdown.
Recovery from the pandemic-induced recession will not be a straight line for most Asia-Pacific economies, more so for the Philippines. That's according to the latest report of Moody's Analytics. To give us more details, we have on the show Moody's Analytics Chief Economist for Asia-Pacific, Stephen Cochrane. Good afternoon, Sir Steve.
Good afternoon.
Okay, so your report flagged the Philippines together with Indonesia for less effective COVID policies, which could hamper prospects of a rebound. What areas are you talking about here specifically?
Well, I think that the most important point here, and what we've learned in terms of managing an economy in a period like COVID, is that it takes a real integrated approach. It was hard to really understand this in the beginning, 18 months ago or so. In the beginning, one might have thought, well, it's just a matter of testing and contact tracing and quarantine. And then when the vaccines became available, and then it was all about just getting vaccinated up, right? But what we've all learned over this time is that it's much more complex than that. So, for example, the vaccinations, you mentioned that soon there will be universal access to vaccines in the Philippines, and it's a great move. And countries that managed to get ample supply early and do universal vaccination have benefited in terms of getting the vaccination rate up, and it seems to have an impact on both how quickly the virus can transmit and how serious people get sick. So, not only having a vaccination, but being able to get it spread broadly across all, say, age cohorts, and getting it spread geographically across an entire country can be difficult in a place like the Philippines, of course, with being an archipelago. But that's important. And then the social distancing, the idea of quarantines. In the beginning, it seemed like all we had to do was shut a country or a city down for a while, right? But that was extremely painful last year for the entire global economy. And there have been many lessons learned in terms of how to do sort of selective social distancing, how it's called in the Philippines now, granular quarantines or granular lockdowns. Many places are emphasizing rotations in workplaces or minimize seating in dining areas in restaurants, but still allowing restaurants to be open with just a minimal amount of seating, but very, very carefully spacing out. So the idea of doing many things in an integrated way, planning it together, is very, very important.
Okay. Now, also in terms of your risk spectrum, the Philippines somehow spared from the bottom 5 here, but not far behind still. What spared us from that inclusion in the more high-risk group?
Well, the one thing is that now at least the vaccination rate is getting up. It's about, my understanding, it's about 11% now of the population is fully vaccinated now. That's well above some other countries. If you look even at places like, say, Korea, they're down at still at 2-3%. And that was a very, very important component. And in fact, I assigned a higher weighting to the vaccination rate than I did to other factors. But the fact that the number of cases is still high and rising, and also that the number of deaths is still high, an indication of either simply how serious the cases are, and that is the case without a high vaccination rate, or could be a reflection on the quality and quantity of public health service as well.
Mm-hmm. Now, of course, but still caseloads in the Philippines still rising, driven primarily, of course, by the community transmission of the Delta variant. But the DOH, or the health department here, has already said that, severe cases have been limited to 2%, attributing that to, like what you mentioned, scaled up or ramped up vaccination here in the country. But then they're now targeting at least vaccinating the general population by October. How important is it that we actually move to that direction as soon as possible?
Actually, to me, that is the most important move to make, is to accelerate to, and the way I talk about it, you really want to bend the curve, the vaccination curve. Instead of moving very slowly, you've got to bend it up, accelerate the pace of vaccination, and importantly, get it evenly spread across the population, both geographically and across different age cohorts. To me, this isn't it's not the silver bullet. It's not the only thing that policymakers must do, but it's perhaps the most important, and it allows the other kinds of integrated policy endeavors, if you will, to be more effective.
Mm-hmm. Now, like you were mentioning about this earlier, the move to more granular lockdowns here, with several experts already questioning the efficacy of more stringent lockdowns like ECQ rather. Is this going to be a more viable option at this stage when cases are still on the rise?
Yeah, it's so hard to say in a sense. What we do know is that the complete lockdowns have pretty devastating economic consequences, and we've seen that in the Philippines, actually almost worse than any place else. That the lockdowns in the Philippines, which have been lengthy and severe and geographically broad, have really caused the Philippines to lag the rest of the Asian economy in terms of economic recovery. So I think there has to be a balance, if you will, of allowing some economic activity in a very prescribed way, maintaining social distancing, maintaining very, very important protocols, but still allowing the economy to operate. I would suggest that one way of focusing on this is initially focusing on export-oriented industries, because exports have been a part of the global economy that has really supported the Asian economy. And if you can at least get that part of the economy to continue to grow, that forms at least a base for economic growth. And then slowly opening up the domestic economy as you can over time.
How much gain at least are we expecting should the country at least open the export economy even further?
How much gain in terms of economic growth?
Mm-hmm. Yes.
Well, yeah, I think that's important. I look right now at the Philippine economy this year growing by about 4 to 5% maybe at the most. I may be a little bit low compared to the consensus, but I think that's a pretty good guess, actually. It's what our models are telling us. Is a likely case, assuming that the export economy still remains fairly open, and that a limited amount of the domestic economy, domestic consumption, is allowed to stay open as well.
Okay, now, Steve, again, I know I've asked you this a number of times already, but given your current models, when do you see at least pre-pandemic growth happening for the Philippines?
Oh, boy. To get back to the level of economic activity for the Philippines, it could be towards the end of the year next year before we actually bring, using GDP as the major gross domestic product, right? Before we see GDP return back to its previous level. And that's, again, because the turnaround has simply been so slow, the pace has been slow.
Okay, thank you very much for your time and the insights this afternoon. Again, Moody's Analytics Chief Economist for Asia Pacific, Stephen Cochrane. Thank you, sir.
Thank you.
And those are the biggest stories this trading day, September 1, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess Delos Santos, and we are One News. Mask on, wash hands, and stay safe, Philippines.